Hey guys, welcome back to RWM Finance. Today's video is titled How Warren Buffett Invests. So we're going to discuss the investment strategy of Warren Buffett. So if you haven't subscribed, please scroll down and click that subscribe button for me, and then we will just move right on into the topic. So I'd like to start off with, telling y'all a little bit about Warren and kind of who he is if some of y'all didn't already know who he was, or if you didn't know anything about him. Warren is an investor, a business tycoon, and a philanthropist. He is also the CEO of Berkshire Hathaway. He is also considered to be one of the most successful investors in the world. And as of December 2019, he has a net worth value of 88.9 billion US dollars. I know, pretty crazy. So it seems like this guy is doing something right. What got me interested about Warren Buffett was the book Buffettology by Mary Buffett and David Clark. I read this book and I learned so much about investing, Warren's investment strategy, and enough information for me to, make this video. So if you're interested in that book, or other books that I've read, I have the link to that book and others in the description bar below. Now, let's move on into Warren's investment strategy. So first off, Warren focuses on the intrinsic value of different companies. This is one way he decides which ones he is going to invest in. Warren invests in companies that he understands. He understands the products of those companies, and so this is kind of why he has such a good investment strategy. You don't want to go out and purchase shares of a company whenever you don't know what their products are or what their services are or even what they do. Warren only invests in excellent businesses that have an expanding value. Determining this can be tough, but if the company's profitability keeps increasing, then the stock value should eventually follow. Warren buys stocks when they are considered on sale to him. Warren uses the intrinsic value to determine a price, and if the price per share drops below that price, that is whenever he will usually buy. This usually happens during dips or recessions in the market. So Warren's advice is to choose a kind of business that you want to be in and let the price of the security and the expected rate of return determine when to buy. Another way of putting this is to find what you want to invest in and then wait for a price you are willing to pay. Warren purchases big stakes in companies he likes, which is another way of saying whenever he finds a company he likes at a price that he likes as well, he buys a lot of shares. Warren also says to learn an area really well and don't stray too far from it. By doing this, don't diversify too much. Keep a pretty concentrated portfolio. Warren's favorite holding period for his investments is forever. Now, forever might seem like a bit of a stretch, but Warren invests for the long term because there are many benefits of holding your investments for that long period of time, including dollar cost averaging, tax breaks, and compound interest. According to Warren, compound interest is the secret of getting rich. Let me just give you an example of the effects of compound interest. Say you were to put $300 every month into an account for 8 years. The total would be $28,800 over those 8 years. Say the market goes up 10% over 30 years after that 8-year period. Never mind. We'll say 8%, be a little bit more conservative. That $28,800 would eventually add up to be $1.8 million after that 30-year period. That is the power of compound interest, and that, according to Warren, is the secret of getting rich. The time to sell excellent businesses is never, and Warren says that we should get motivated about the long term like business owners, because that's basically what your investment is. Your investment is basically your business. One of the strategies that was mentioned in the book Buffettology on how Warren finds great investment ideas is from shopping at the supermarket or just shopping in general. Go to the supermarket and think about investing in those brands of products that you buy or the brands of products that you see people buying. Think about those brands like Coca-Cola, Wrigley, Hershey Foods. Look for basic businesses with products that people never want to see change. If a company has predictable products, it usually equals predictable profits. Some other stocks that Warren speaks highly of within the Buffettology book are Kraft Foods, Johnson & Johnson, Procter & Gamble, and Hanes. Another tip from Warren is to make sure that you investigate before you actually invest. Like I said in earlier videos, make sure to do your homework on the companies or organizations that you would like to invest in. Warren suggests looking up information about the companies of your choosing in the Value Line, Moody's Guide, and the Standard & Poor's Stock Report. Try to get annual reports for the companies dating as far back as you can. This way you are able to see trends for the company. Also, one more tip is if something seems fishy about an investment or a company that you would like to invest in, just move on. Just like there are more fish in the sea, there are other investment opportunities out there. So that was Warren Buffett's investment strategy along with some other helpful tips. I hope you learned some valuable information, and if you enjoyed what I had to say, then I imagine that you would probably enjoy the Buffettology book as well. I have a link for the Buffettology book along with other books that I have read in the description bar below. Make sure to check them out. Remember guys, I post videos every Monday, Wednesday, and Friday, so make sure to tune in. Also, if you enjoyed this video, make sure to give it a like and subscribe to the channel below. Thank y'all for watching, and I will see y'all in the next video.